Joining us now for more on the market, Zachary Hill, head of portfolio management at Horizon Investments. Zachary, we're half a percentage point from another record in the S&P 500. Do you think we get there before the end of the year?
Good morning and great to be with you. Yeah, I really do. I mean, there's nothing to kind of stand in the way of the market right now. We've got positive momentum. We've got seasonality, which has worked very, very well this year. So I do think we're going to be hitting all-time highs, if not the end of the year, very early in January.
There's, some would say that the recent rally is leaving the market vulnerable to disappointment, maybe not in this kind of setup at the end of the year with little news, little in the way of economic data coming, but you've got earnings to look forward to in the next 3 weeks or so. Do you think that the market is currently priced to perfection at these levels?
Well, I think it's good that you brought up earnings because I do think that's a catalyst that we're looking for, in the coming weeks. And so, a lot of, ink has been spilled about the Mag 7 and, how top heavy the market is. But I think what that kind of misses is those companies have really out-earned the rest of the market. Equal weight S&P or small caps lags behind really substantially in terms of earnings power. And so, we've seen kind of some breadth increase over the last few weeks. That's been very, I think, healthy. Especially for the areas of the market that haven't participated, like financials, like you were just talking about. But really, to kind of see that in a more durable way, we need earnings to validate that. And so, I think we have this window right now where we don't have a lot of new information. And so I think that's kind of dominating markets. But, come the end of January, I think we're going to be, doing a lot of work looking at what the projections for 2024 look like.
Perhaps a bit more dispersion in 2024. I see that you think stocks next year won't beat 2023 gains, but you think they'll do better than cash and better than bonds. So how would you be allocating your portfolio given that thesis?
Yeah, that's kind of a great point. It's a conversation we're having with our clients every day. I think the last kind of 18 months has just been a shock in terms of, what interest rates can do and what they can do to bond portfolios and what they can do to overall diversified portfolios. And so you've seen a lot of people move into cash, move into T-bills, money market funds and the like. And I really do think 2024 is going to be, that kind of year about getting reinvested again. Now, it's a little ironic that it's happening at all-time highs, but, that's sort of the way that these things tend to go. But, I do think that it's going to be a good year for the stock market. We don't see a recession coming. We see, the Fed kind of delivering cuts in Q1 of this year and continuing, hopefully, to do that throughout the rest of the year. And so you've got policy that was a headwind. It becomes now a tailwind. You still got good, strong earnings coming from the consumer. We do think AI is very early innings as well from a theme. And so all those things kind of together tell us that, you do want to be exposed to stocks here in a material way. And then on the fixed income side, look, 5.5% is great. But what about if the Fed cuts the 6+ cuts that are in the curve next year? That's going to look a little bit different. And so we do think kind of extending duration and fixed income, kind of going from cash to fixed income is a thing that investors are going to be doing really all of 2024.